Hello, everyone. My name is Drew Dosek, and welcome to Trading the Close. We had earnings after the bell yesterday with Palantir rocketing higher. We had the markets gap higher today, and then we sold off most of the day, creating a bear flag intraday. Opposite price pattern that's displayed on the chart from yesterday. It was we were forming a bull flag, so now we've got conflicting signals. Plus, we've got a key trend line that did break today. But first, let's get into the market summary board to see where everything is shaking out today. You see here on the Dow Jones, we are down 0.36%. NASDAQ's now down 0.54%. S&P 500 down 0.64%. U.S. oil continues falling, down 1.62%. Gold basically flat, up 0.2%. And Bitcoin falling pretty nicely, down to 1.3%. All right, so let's jump into the S&P 500 heat map. And you can see here, we did have a down day on the market, so we do have a lot of red here on the screen. Not very big of a move down, but however, it still is red on the screen. Netflix down 2%, NVIDIA down 0.84%, Microsoft down 1.53%, as well as Meta down 1.51%, AVGO down 1.48%, Berkshire Hathaway bouncing back a little bit from that red day that we saw yesterday. So let's jump into the S&P 500 and get into some nitty-gritty of what's really going on here in the market. So we did, just to recap, last week, we finally did tag that top or this parallel channel at the top of the screen, which is on the bottom end of that parallel channel. I was anticipating, at least for this place, resistance to come in and push price down. And that's exactly what's happened. From that point, we're actually starting to form a bear flag. Yesterday was very promising on the move up. And one other thing I want to interject with, I didn't mention much about the jobs report yesterday. And there was a reason for that. Now, the jobs report came out on Friday, and it was not rosy, to say the least. Plus, we had a lot of previous reports revised downward. So this is starting to illuminate to the Federal Reserve that the economy is not as strong as what was anticipated with the previous reportings. And investors have reacted, starting selling the market. And so that takes us to where we are now. So let's jump back to intraday, and I'll show you what's going on with S&P 500. So you see here this trend line. It looks like for now it's holding price up, but please note, this is where a price is currently trading right now, down here near the bottom of this candle. Let's flip to the 10-minute chart and get a better view of what's happening. Yesterday, as I said, we pushed up higher, formed a bull flag, and then another bull flag, and then really consolidated all day. In essence, this all was bullish consolidation for potential move higher, which what we saw first 10 minutes and actually 20 and 30 minutes of the day. Then all of a sudden, the selling pressure hit. Big down move, and now a bear flag pattern. Plus, we have this smaller short term. Now, when I say short term, these trends can be broken back above. We'll see if earnings propels the S&P 500 over this trend line today. However, in the near term, this is a broken upward trend, albeit considering we're only up 3 days now, considering the bottom 1, 2, 3, only 3 days up on the S&P 500, yet we're already starting to break trend. So this likely will lead to further downward movement on the S&P 500. That's typically what happens when price actions break these trend lines. We may pop back up, retest this area, but then ultimately start fading back down. Again, key to understand, this is a short-term trend line. It's not going to, it can be broken easily to the upside. However, it's showing us right here on the charts, and that's all we can go by because the price is truth. We are starting to break trend on this near-term bounce that we've seen here on the S&P 500. Into the Qs. The Qs today, notice how yesterday I was saying price was getting right back in between these two trend lines, and today we actually tried to pierce above the top end trend line, but since got rejected. Then we got rejected out of the squeezed area and started moving price further back down. A little bit more bearish of a sign here on the Qs. Watch support down here at 539.19 if we see any further selling pressure in the near term. Next up, the SMH. Now, the SMH, you can see here, is really just a lot of consolidation and chop around this area, around its all-time highs. We tried to break into the parallel, didn't confirm, and got rejected. Now, since we're trying to make another attempt to get back up into that parallel, area to the watch on the upsides right here at 293.08. If we get back above and confirm, that would be a green light for the SMH. But with what's going on in the S&P 500 and the Qs, it's likely pointing to a little bit more downside. But remember, SMH is a leading indicator, so I'll be watching this to see if we have a big spike or a big plunge lower, which will help guide us on the Qs and the S&P 500 into the IWM. Now, IWM put in a great recovery day today. Notice we're closing above this declining trend line. That's a very positive move for IWM. Let's see if we can back it up with a confirming move tomorrow, and that will then make this move have some potential staying power in it. Again, we're not near the all-time highs, the IWM. And keep in mind, too, when markets reach a top, and then they start selling hard, everything likely will go down, but there's also money rotation that goes on. With the Qs and the spiders and the SMH all at all-time highs, these institutions need to redeploy their capital somewhere. If we have just a general sell, like a soft general, and not like a big, huge slam to the market, we'll likely see the IWM actually receiving capital and inflow of investors, which likely could and still hold price right on this trend line. We'll see, though, if we confirm tomorrow. Big critical day for IWM on the charts. Next up, Bitcoin. Now, Bitcoin, as you see here, we've started to fail from this consolidation area. Bull flags at the top of charts, guys, typically fail. This is technical analysis 101. Understanding these charts helps you anticipate moves, puts you in the right area to make profits. Don't forget that, guys. Technical analysis always reverts back to that. These trend lines give us great levels of support. So back into Bitcoin that we see on this pattern and this drop down that we've seen most recently, it's starting to form an immature bear flag. And what do I mean by that? Well, price action needs to extend out a little bit further for this bear flag to mature and then lead to further downside. Very much like how I was saying here, we consolidated. Look at all these days of consolidation on the bull flag at the top of the chart, and then it failed right there. So we need more consolidation, and then the likelihood for Bitcoin with its consolidation so close to this inclining 50% area, the parallel, I am seeing Bitcoin likely skipping that as a support zone and then heading down to test this declining trend line right at 108, 127. That's my next level of support I'll be watching on Bitcoin. Next up, we've got gold. Gold here, as I said, was moderately flat today, only up 0.14% as of now. So great bounce off of that support, and this rally is starting to stall out right near resistance, not much further ahead. Watch tomorrow on 33.96 on the chart of gold. That will be the resistance and likely will start pushing price down lower on the chart of gold. Now, silver had a nice recovery today. Look at it pushing up here, now starting to get into this consolidation chop in this zone, which is right around $38.10. Be watching for silver price action tomorrow to push up into that resistance and likely stall out. It would be good for any bulls on silver if we have a price action move up towards the top end of this big red candle and consolidate for a few days, build momentum to start moving higher. But ultimately, the crossroads will be met likely tomorrow when price hits this area just above $38. Next up, we got U.S. oil. As I've said before, this is just a bigger bear flag pattern that's playing out here on the chart of U.S. oil, now testing these recent lows. And if you look back here, this candle was back on June 24th. So this consolidation has really lasted an awful long time, spanning nearly 2 months. So we'll see if oil finally breaks this bear flag consolidation. Target for the near term for me is just under $60 at $59.58. Now, keep in mind, that's a declining trend line. So if we continue this consolidation, this area and target will become further and further away the longer price action continues in that manner. Next up, Nat Gas. Now, Nat Gas did break beneath the $3 threshold yesterday, but has since recovered back. But notice this declining trend line that I drew yesterday on the chart has caught price. It pierced beneath it, and then today opened up right on that area and has since excelled through, now closing just above $3. Great recovery on Nat Gas. This sort of diagonal decline typically results in a bounce. So we'll see if we consolidate on here on this trend line, which then could lead to a small break, but ultimately these declines could maybe poke beneath like a bear trap and then have a nice pop rebound up. First target for any bounces on Nat Gas is going to be this inclining trend line you see here, currently around $3.23. Next up, the dollar. As you see here, we're consolidating right here on the DXY chart, and this was a big move up that we had a break of an inverse head and shoulders pattern with a targeted measured move up here at 101.41 on the charts. But since we retraced the scene of the crime and did not get that springboard bounce effect that typically occurs, since we've just consolidated right here, we'll see if we get more consolidation in the near future, which would then turn this red candle and price action into a bear flag, which then would imply a break of this inverse head and shoulders pattern. So this is also on a critical juncture right here on the DXI. Do we break beneath and cancel out this potential positive measured move up? Or do we just consolidate here, consolidate, and then break the bear flag and then fall down lower? We'll see in the coming days of DXY. Next up, Palantir here. Now, Palantir had a nice surge towards the end of the day. You can see right here, these last 4 or 5 candles really changed the appearance and pattern of what was going on. At the time, before those 4 candles pushed price right back up, we were looking at a spinning top here on Palantir. Nonetheless, great move up. They had earnings after the bell yesterday, had a double beat, and now they increased guidance for their full year revenue for the 2nd time this year. This is a big beat. Obviously, the stock has been in the news, but they directed all of the momentum back to AI. Whenever I see a gap up like that in a sell-off at the top, that tells me a lot of investors are eager to go ahead and start taking profits. Now, some analysts are upgrading Palantir all the way up to $200. And if the $200 price target is hit, we do have an inclining trend line right here. That will be the next area of resistance on Palantir. That $200 mark can be hit as early as this month. If you see here, I'm right there on that trend line at August 25th. So if that does happen, we will likely then start facing resistance at that time frame at that $200 psychological level, plus the extended move here up on Palantir. Ultimately, though, this sort of gap up and sell off is not the best sign for a stock. Usually we gap up and sell higher. So we'll have to see price action. Any pullbacks down on Palantir, first area of support is going to be this trend line that was broken because of today's earnings. So that trend line currently is at 162.82. And again, that's the first level of support. If we get any big sells in the market, we're likely breaking through these levels of support. So something to watch there on Palantir. Another stock that had earnings is Axon. Axon also, same thing, double beat as Palantir and extended its full year revenue forecast. So the stock catapulted up, breaking into brand new all-time highs on this chart. Beautiful move for this. As you notice, I've got some trend lines drawn on the chart. This one from pivot to pivot. And notice what price is closing above this trend line today. That is a very positive sign for Axon in the near term. Now, what we need to see for Axon bulls, we need to get a close above this candle to show that there's staying power with this earnings beat. That will be determined tomorrow or a later date. So keep a close eye on that, but mainly also this inclining trend line. Should price get back under this inclining trend line, we likely then are vulnerable for support area to be hit here at 787.58. So this trend line currently is at 854.96, basically right around 855. If price tomorrow gets under that area, that would not be good for Axon. To the move up, an area to the upside, there's not much further before we get some really stiff resistance. We're looking at tomorrow right around the $900 area, which also is a very big psychological number where a lot of investors likely will start jamming that take profit button. All right, so next up into some earnings. Tomorrow morning, we've got earnings for Uber. And Uber, as you see here, has had a nice 3-day pop, albeit a doji candle placed today. There's likely some investors that are wanting to get out before earnings take place tomorrow. So this is in a coin flip scenario. Now we're nearer towards the higher end of the chart, most recently been rejected from a breakout scenario. If we do have good earnings and push higher, first area of resistance not far away at 93.12, but I likely will step up and try to short Uber around $97.72 should price excel up that way. To the downside, we do have gap fills that could catch support on price if the earnings report isn't that bad, but the bigger support is down here at $83.55. Next up, Disney also reports earnings tomorrow morning. And you see here, Disney, very similar pattern as what's going on over on Uber, except for Disney has yet to break out of this parallel channel. Let me rewind the clock just a little bit to show you this parallel channel is slightly inclining, but since the end of 2023 has contained price for Disney, and it hasn't gotten above this area. So this resistance area on the top end of the parallel is very important for Disney to break out of its rut and trading down here towards the lower end of its charts. So be watching resistance at 125, followed by 130 and 46 cents, which is the inclining trend line. To the downside, be watching 113.65 for initial support. And these levels are intraday levels for good day trading opportunities if price does excel straight into that. Now, if we meander, consolidate, and then hit it, it won't be as strong. We need a straight hit into those numbers and or down to that support, and that will give you a great intraday day trading opportunity. Next up, Unity Software. Now, Unity Software does also report early tomorrow morning. And you can see here, price action has really been forming a bear flag most recently on the charts here. However, we have recently broken out of an inclining trend line right here. And if you notice, we retested it and price has held. So far, this is a solid area for Unity Software. I'm going to be looking towards the upside for resistance. First one's not far away, just under 10% at $36.26. A bigger resistance level up here at 42.34. To the downside, if Unity does start selling off this inclining trend line that you see here on the chart, right at $28.40 will be a great entry for a long play. Notice how it would have to get through this gap fill as well as this gap fill right here in order to hit that trend line. And if price excels down into that area, that would be a great day trading opportunity for tomorrow. Next up, we've got APP. Now, APP reports earnings tomorrow after the bell. So tomorrow, be anticipating a lot of price movement on APP. Also, in the near term, notice this trend line that's declining right here. Price tried to get above and has since really been kind of consolidating over the previous 4 trading days, but we haven't confirmed this breakout. That implies to me APP likely will start going lower on the charts. And if we do, first area support at 336.59, followed by all the way down here. Now, this wouldn't be a day trading opportunity. This would be more of a swing down here at 289.12. Now, if we do excel up, that would then confirm the breakout here on APP. So this is really also a critical crossroads for this chart, on the verge of breaking out, but hasn't been able to confirm it with the previous 3 trading days. First stop on the move up will be this pivot high at 429, followed by, now APP really can get running, so be careful with this one. This one can run all the way up to 525. It all depends tomorrow if we get a close, a close confirming above before earnings, or even after earnings into Thursday. If we have Thursday's price action move up, that then will flip this trend line into a support area that can be bought on any sort of declining price action. So really critical to watch tomorrow's price fluctuations and what's about to happen. Next up, we got DraftKings also reporting earnings tomorrow after the bell. Now, something I want to go over first about DraftKings. One thing that I've noticed, we'll go back through history on this chart. One thing I've played for the last several years, and now that I'm bringing it to everybody's attention, it likely won't work this next year. However, this is something, it's been a play that's worked for me year after year after year. And what does DraftKings do? They focus on sports betting, right? And when do most individuals play sports bets? Well, it's at the Super Bowl. The Super Bowl is the mecca. At least in the United States, we can bet on what color Gatorade the coach is going to be drowned in after the game, what coin is going to be flipped, what side is going to be flipped, who gets the ball first. All of these bets, random bets take place, and a lot of retail bettors get involved with that just to have some fun for the game. Well, with all that attention and focus going into sports betting, you would think DraftKings would lift up into the Super Bowl, and that's exactly what it does every single year, guys. So let's move it back over the chart. You can check this out. You can see here back through time, we had at the end of 23, price action moving up into Super Bowl, and even pierced higher during March Madness, then sold off. We had a similar situation here. Look, going into the end of the year, price action was coming towards a pivot low. Then towards the beginning of the year, price action excelled all the way up into Super Bowl, then sold right off. And you can go back through this chart and test it. You can see it here also in December of 2022, price action moved right up. Here's Super Bowl, and then started selling off. Ultimately created a bull flag pattern being down here on the chart. Very great insight as to the potential fluctuation, when to get in and out of this trade on a seasonal basis. And guys, stocks have seasons just like the earth too. So it's something to learn as these charts do repeat themselves. So, okay, back into earnings. All right, so this is all being somewhat bullish consolidation on the charts, which would imply further upside on the chart of DraftKings going into earnings. However, you notice here earnings reported back here over in May 8th, and we're now trading about 28% higher on the chart. So we've had a nice move up. So that kind of cancels itself out, telling me this is more of a coin flip scenario. All right, so if we do move up, first area I'm watching is 48.48. If we do start declining off of earnings, this trend line is going to be a significant level. Basically, this wedge that you can see drawn here on the chart, right, starts at $41.62, and the bottom trend line is about $40.83. I'll be watching that area for day trading action coming into Thursday, guys. All right, so that wraps up Trading the Close. Thank you guys so much for tuning in and joining me. Can't wait to bring you guys some more price action on the charts. Until then, I'll see you on the charts. Take care.
Hey guys, Lawton here with Verified Investing, and today I'm here to talk about Kinesis.money, our sponsor. Thank you to Kinesis for sponsoring us. So Kinesis has this awesome thing called yields, in which you can literally earn gold by just performing different activities on their website and their platform. So the first way that you can earn on Kinesis.money is through their holders yield. So basically what that is if you buy some KAG or KAU from them, which is basically equivalent to gold or silver, they're one-to-one crypto equivalent of gold and silver, you're able to collect money from them, right? A percentage of all of the fees that Kinesis takes over transactions, over buying KAU, KAG, or anything else is distributed to people that hold on to KAG and KAU. So super cool. Now velocity, the velocity spending is also really cool. So if you spend KAU or KAG, you're actually going to get a percentage of all the fees. Again, this is of all the fees that Kinesis takes relative to how much you use Kinesis. So this is things from going to the grocery store and buying things on your Kinesis card. This are things like buying KAG, KAU, sending it to someone else. And finally, it's the same thing as trading on their platform, right? If you do any of those things, you qualify for this velocity yield. The next awesome way that you can earn with Kinesis is through the referrers yield. So if you refer any friends, family, you'll get a percentage of all of their transactions in perpetuity, which is super cool. They also have a partner for a program for partners and minters. But what I really want to focus on is this KVT, the most exciting part of Kinesis for me. 20% of all of the shares of all the transaction fees that happen on Kinesis are going to be distributed to holders of the KVT crypto token. There's a limited amount of crypto supply, but that's a really cool way to actually own part of Kinesis. You can get in on the ground level and just hold those tokens and collect a nice return. Thank you so much to Kinesis for sponsoring this video, and go check out their website at Kinesis.money.